Well, here we go again. Banks are failing. So when this happens, in this case, First Republic, what do we do with our money? What do we do with our money that we're saving for retirement, for just investing in general, or just cash savings? What do we do with that, guys? I'll tell you in a couple of minutes, but here's what happened today. First Republic stock fell almost 50%. It's down 90% year to date. I mean, it's just crazy, right? I mean, after Silicon Valley Bank and Signature Bank failed last month, this is the third one. The latest news is that federal government is on the verge of seizing First Republic Bank. Now, there have been reports very recently that First Republic is going to slash 25% of its workforce. Okay, what does that do for us as investors? The thing you have to worry about is that bank failures usually come in waves. Back in the 1980s, there were many bank failures, countless bank failures through the decade of the 80s and a little bit into the 90s as well. From the 2008 recession, for the next 5 years, there were countless bank failures. These things tend to come in waves. So this is the third, almost, let's say, we're on the verge of the third bank collapse in the beginning of this year. What do we do? Also, banks, even though the Fed has been raising interest rates, banks are not raising those interest rates for their customers. So what does that mean? Especially in the case of First Republic, a lot of their customers took the money out of the bank. Not just happening just to them, banks in general, because they are not giving us the same interest rate hikes that the Fed has been putting out there. There's a statistic out there that almost half of Americans now are very concerned about bank stability. Why wouldn't you be? Look what's going on. So what do we do? What do we do here? I mean, people are moving a lot of their money to money markets, CDs, treasury bills. Makes sense to me. Why would you just leave it there in banks that you're really not sure of? Also, there are much better interest rates on online banks, right? If you trust your online banks, that might be a good way to go. What I plan on doing, I don't have any money in First Republic. But for any of you do, for any of you that are concerned about this, I mean really concerned about where we're heading, what I would suggest, excuse me, is moving your money to one of the 5 GSIB banks. What that stands for is Global Systemically Important Banks. These are banks that the government will never let fail. They will not let these banks fail. So if there's a safe place for your money, outside of like Treasury, T-bills, stuff like that, it's going to be one of these 5 banks. Okay, number 1, JP Morgan Chase. I have a lot of money in Chase. I've had it there for decades. Very, very important bank. One of the GSIBs. Actually, the number 1 GSIB. The government will never let these banks fail. Number 2, Bank of America. Another long-standing bank. A GSIB. Remember that. GSIB. Very important in this day and age of bank failures. Number 3, Citigroup. Another bank the government will not let fail. Number 4 is Goldman Sachs. And the 5th one is Wells Fargo. These 5 banks are very important. The government will never let them fail. If you're concerned at all about your money right now, consider putting it into one of these 5 banks. Like I said, I've got a lot of money in Chase right now. I have some in Citigroup as well, not as much. The other 3 I'm not familiar with that much because I don't have money in them. Outside of the fact they're huge banks, very stable, personally, I don't have money in them. Wells Fargo, you might want to think twice about that one, even though they're one of the 5 GSIBs. I mean, especially with what has been going on with them the last couple of years. Kind of sneaky, huh? Kind of sneaky at times. Yeah, I don't know. I don't have money in with them. My mother did. I don't. I don't think I'd be going with them right now. Another way to go is You can take some of that money, put more into your investments, in brokerages. Brokerages are covered by what is called SIPC insurance. What that does is it protects up to $500,000 of your money that are in investments at these brokerages. Okay? Now, the really large brokerages, like Fidelity, for instance, they actually purchase what's called excess SIPC insurance. This will cover up to $1.9 million of cash you have with them that will be put toward investments. So, take some of that cash that you might not be sure about in banks, put them into some of these big brokerage firms. They're protected just like banks are. Banks are FIDC, brokerage firms are SIPC, all right? They both cover a lot of money, a lot of amounts if you want to put it in there. So I have a lot of my money right now, my cash, in T-bills, 6-month T-bills, which are coming up for maturity in 2 months. I also have a lot of my cash in I-bonds. Now, these are both backed by the full faith of the U.S. government. I feel very comfortable with that. Would I feel comfortable in my money at a small bank right now after these 2 collapses and third, which looks like it's on the verge of collapse? No. To be honest with you, I wouldn't. I would probably switch my money to one of these G-SIBs or put it in a large brokerage right now. If it's money you want to have on hand that you need to get a hold of, let's say an emergency fund, go to a well-known online bank, Synchrony, something, there are a lot of banks out there that are very well-renowned online banks that will pay you a very good interest rate, okay? Look at these online banks. Put your emergency fund there, Can't hurt, guys. Take the excess cash you have, put it into stuff like T-bills, I-bonds, CDs, money markets. If I were in the position of having money at a small bank right now, I would not continue to have it there. Move it out. Take some more, throw it into your retirement funds. Create a separate retirement fund. Get some of your money out and do a Roth IRA. Anything but have it in a small bank at this point. Okay? So if any of you guys have got any good information out of this, my name is Duane. I retired at 59 with just over $500,000 in the bank. This channel is for people with moderate income who are looking to do the same. If you're interested, consider subscribing. And if you like the video, please like it as well. So just remember, guys, as long as we stick by what we know what to do, as long as we trust our judgment and look at the current trends and topics and see where things are going, just remember, at the end of the day, we got this.